Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good morning. Ira Epstein of Linn Associates with your Tuesday morning flash update for June 19th, 2018, 9:25 a.m. Central Daylight Time. Trade wars. It's really that simple. The president last night, Trump, upped the ante, letting out the word $200 billion more in tariffs. Okay, game over. China can't match that. We only do, depends who you listen to. Let's say it's $150 billion in business with them on their that they import from us. It's game over. They can't match $300 billion plus $350 billion in tariffs on goods, so they go to the next round. What's the next round? Embargoes. Could be they just don't buy any products from the U.S. They just back away from everything. You're going to see this get worse before it gets better, is what we've been saying. I'm a little taken back with the speed that it's all happening. I think many traders are. I want you to look at the sea, and the word is the sea of red behind me. Everything's down except bond markets, note markets, the U.S. dollar, and the Japanese yen. That's it, friends. You're down in the soybean market, 43 more cents, a complete washout. Grains getting smashed left and right. Sugar, crude oil. Remember, if the economy starts crumbling, any crude's too much crude at some point. Stock market, as soon as he mentioned this last night, it just let go, and it's been ugly, ugly, ugly. It's that way to look at it. Metals are not getting any bid on it. I had just talked about copper going down to the $3 level in my newsletter, and I had done this a couple of days ago. I'm shocked that it's down to the 305 level. It's the speed that it's all happening with. And of course, as you take a look at everything going on here, ugly. Now, the Bank of England has a monetary policy meeting this week. Even if they were thinking of doing something, they're probably not going to. So that'll get pushed off probably until August. Let's take a look at what's going on. As I said, the president has alluded to the fact of $200 billion of additional tariffs, and China's retaliated already. They are coming back at us. U.S. housing starts and building permits. You know, what does it matter in this environment? It was a good number on its own. The starts were up 5% to 1.35 million annualized. They expected it up 1.8, so triple the amount. The permits going forward is where you're getting a little bit of ugliness. It was about 6 times the amount or more decline than the market was looking for. Think of the higher interest rates you were having, the cost of building a new home, all right, $9,000 more in an average home for lumber and so on. They revised the April starts from a negative 3.7% to a negative 3.1%. So all in all, it wasn't bad. This is scaring people. Ahead of the Bank of England, they expect the market to sit still, as I said. Energy sources are now saying Russian oil export schedule for the July-September period is now in the point where they're planning on increased exports and increased refinery runs. So basically what I've been telling you, they've already begun it. The Saudis are probably also producing more at this point in time. A panel for technical issues within OPEC suggests worldwide oil demand set to stay strong the latter half of 2018. Only if you don't have full-blown tariff wars, trade wars that continue on. If they do, they better do some rethinking there. They'll meet on Friday. The yield on the 10-year note today just went down to 2.879. Remember, this was 3.15 just several weeks ago. So this has come crashing down. Just from yesterday, it's down nearly, what, 0.5. It's down quite a bit. Metal miners, if you're wondering how are they holding up in all this, let me show you. Rio Tinto down 3.25% today. Anglo American 2.7. BH Billiton down 2.6. Glencore down 2.5. So this is taking its toll on every sector. It could be the financial sector, and yes, we know interest rates, the Fed wants to put them up, but this bump in the road is just taking everything down. And what I'm going to do my best to do is write about it and give you some ideas. For those of you that are my subscribers, you got my morning video, and I think I did a lot of covering of everything in that. I will write about this. I've begun already this morning, got here early, been writing away for it, and I'll try to explain and take away some of the noise and some of the fear you might have. If you get my audio commentary, it gives me a chance to expound on all this. Some of you might just want the commentary, other will want the trade recommendations with it, and I can tell you, I've got my clients at this point flatten these markets because I don't know, the fear is so tremendous. To get it, give us a call. You can go to our website, www.iraepstein.com. You'll see a carousel of free offers. You can always click right up here if you're watching me off YouTube, and it'll take you right to that page to sign up for your free offerings. Pretty good time to do so. I'm Ira Epstein. You have a great day, and I'll speak to you all this afternoon.